Hey guys, Darren here. Thanks for joining this week's stock option market update. It's for the week of August 7th, Monday, and we're going to cover what happened last week as well as what's forthcoming in the week ahead. And we are going to touch on some of the economic data, some of the things that happened last week, inflation, interest rates, the jobs numbers came out. We're also going to go through each of the trades that we have on the option trading platform and the different strategies as well as far as leaps options or put verticals or strangles. We're going to show you exactly what we're doing and what we've made money in. So if you have not subscribed already, please do that now. And do me a favor, let's get this video out to as many people as possible. So please hit that like button. And disclaimer, I'm not a financial planner, so please do your own research, talk with your financial planner. If you're new or learning options, I recommend you start small. And lastly, please download that free options workshop in the link below. It talks about the benefits of buying or selling and trading stock options over buying stocks outright alone. So with that, let's jump into it and get into the update. All right, so in looking at the SPX on TradingView for the last 5 days, you can see here in the lower left, we dropped quite a bit last week. We uh, started the week at 45.82 up here, and then we ended the week down at 44.78. So down a little over 2% for the week. And if we go to the um, year-to-date chart, we can see we're still up quite a bit. So we were up 18% the week prior, last week. Now we're up around 15 to 16%. We had a bit of a drop last week. But again, we started the week at 38.42, or started the year at 38.42. So we're still up quite a bit for the year. Some of what is going on, I think, is just some profit taking. Let me know if you have taken something off the table. I mean, we're up big this year, so you want to have calls on, and then any big gains, you want to be taking profits on the way up. That's the whole name of the game. Buy low, sell high. So you may only want to be 30, 50% invested in your trading account right now. And again, this is not my IRA or my retirement account. This is an option trading account that I use. So again, maybe you sold some calls against your position. Any big move down, we can look to buy in again. And we can sell puts and put verticals as IVR moves higher as the market comes down. But I think a pullback is healthy. September is usually a rough month for the markets. And again, I recommend you have a long-term trading plan in place and lock in some profits. The big news for the week, let's see. The big news is definitely the Fitch credit downgrade, and that really moved the market lower early in the week, and that led to massive bond selling, and that was the major one. The payrolls data was revised down, so that signaled the end to the pandemic rehiring phase. Apple beat on earnings and revenue, but their service business was up, but hardware sales slipped. So it dipped like 5% last year, and that brought the market down. So the bears are really saying that we're about to enter a recession, and the bulls are thinking that this is a momentary pause, and they're looking to buy the dips. So let's look at as far as inflation. When it came out last, it was at 3%. Core inflation had sunk to 4.8. The Fed is shooting for 2% historically on core inflation. August 10th is the next CPI report, the Consumer Price Index report. And so that's going to be next Thursday, and that's going to be a big day. So, be aware. You might want to have some money on the sidelines. Like I said, you may not want to be completely invested at this point. The month is expected to be a little higher at 3.3% inflation. We were 3% last month, so that's going the wrong direction, and that can really affect the market. The PPI report follows on Friday, and it's expected to be to move from 0.1% to 0.7, so relatively close to zero. So that's not much of a change. Let's look at interest rates. If we look at this CME Fed Watch tool, um, rates are currently at 5.25 to 5.5, and it's expected to stay there going forward. So that would mean the Fed would pause going forward all the way through January, still 5.25 to 5.5. But in March, that's when they're expecting rates to be cut a quarter point. So we'll see if that happens. And then, from there on, the rest of 2024, they're thinking that the market is going to improve. So with that, let's see. I mentioned the payroll jobs. So the July jobs report showed that we added 187,000 jobs in July, and the expectation was 200,000 jobs. So it was a little bit under, but not too horrible. Let's take a look at the earnings insight report. We'll go to page 1. I really like this report. We're down 5.2% from 7.3 in earnings declines last week. So still the largest decline since Q3 of 2020. You can see right here on the second line, earnings decline. And then going forward, the 12-month PE is 19.2, and the average is 17.4. So they're basically saying the price to earnings, we're still priced a little bit high going forward. I also like to look at page 12. Is it page 12? Page 11 on this report. And, for Q3, we're projecting earnings growth of 0.2 and revenue of 1.3, so very small. But, moving up in calendar year 2024, we're projecting earnings growth of 12.2% and revenue growth of 5.1%. So that's when it really gets back to normal. And then moving on to page 30 on this report, we can look at some of the PEs and where they are. And like I mentioned, overall, they're pretty high. The PE, this is still showing forward PE of 19.2 for the S&P. But you can see energy is still undervalued, so I am long energy. However, crude oil moved up quite a bit this last week, but it's still at 11 versus 15 historical average over the last 10 years. And then utilities are still under, good buy, and real estate as well. So, and then I like the financials. I think they're going to do well going forward. Last thing I want to show is this sector spiders for the last 5 days. You can see communication services was up, but pretty much everything was down due to that, the reports that came out. But let's see now. Let's jump right into the trading here on the platform. So if we look at some of the trades that we had on, or that we have on, crude, I mentioned, moved down quite a bit. Crude moved up. It's at 82.64. Excuse me while I take a drink of my iced coffee. But I had put verticals at 68, 67 put vertical, and 70, 69. Those are completely, they're going to be 100% winners. I don't think it's going to drop that much in the next 12 days, but you never know. We'll see. But as the market moved up, I put on some verticals, and I've got the 83.84 and the 85.86. So if you look at the curve mode on the Tastytrade platform and analysis, and then we can put it a little smaller here with the minus sign, you can see that we're up near the top range here, but we're still profitable anywhere within this range. So we're still in good shape. I'm not going to panic yet. I think, crude, I don't think it's going to go up a lot more. We're at highs, so we're kind of overbought, I believe, at this point. But I think there's a floor between, around 70 and 80. So I think we're at the top end of that range. So I'm just going to hang on to my crude position and stand pat. um, corn futures. I've got three put spreads on now in corn futures. Um, it's at 484 and it's touching my short strikes. So you can look at that. I'm profitable as it moves up, but we are at the lowest we've been for the year. So I don't know how much lower it can go, but I hope not much lower. Um, and then what I'll do if it does, or I'm going to wait, see if it profits in the next 20 days. Hopefully it will. And then if it doesn't, then I'm going to roll, probably in the 10-day period. I'll close all these out and then roll to the next option chain in September. And we'll collect more premium from that. So, but I'll be long because we're at market lows. AI, we've done pretty well. $358 that we've made on this trade. It's at 37.8, and they've got earnings coming up here on 8:30, but we're actually going to be out before then because we're at 32 to 50. We're right in the middle of that range if we look on the curve mode. So we're in good shape on that trade. We can also go over here to the option chain, and we can see, we made $500 in the last 60 days. So not too bad. It's been a good trade for us. AMD, 253 we've made, and we've got the price moved up a little bit at 115, and we've got two put verticals on and then two call spreads. So we're in pretty good shape. Last week it was down here below my first put vertical spread, but it's moved up a little. So we want it to finish in this range, but we're profitable all the way up to the 127 down to the 95. And earnings came out, and it's kind of trading in a range right now. So I think we're in good shape there. We're going to let that ride for a little bit longer. 13 days to expiration. We can still make $335 in it in the next 13 days. Amazon. Let's see. I think I put that one on. There was earnings last week, and I placed an iron condor in September and collected $161. So you can see that here, the iron condor I placed is still open. We made $39 on it. Earnings came out. It's a good long-term company. It moved up a little, but we're still within that range. So I'm going to hang on to that going forward. BAC, we're long some leaps in the banks. So BAC, Citibank, Bank of America, and then Wells Fargo all here. I'm not going to go deep into those, but I've got leaps on. I'm long the banks going forward. So we went over those last week. No real change. And let's see, moving on, Chevron, CVX. I like the oil stocks. We had a put vertical. We've got 13 days left. We're up $22. And let's see, in the last year, we've made almost a couple $100, $191 trading in and out. But Chevron's in good shape as long as it stays above this, short strike, the 155, right? Yep, we're in good shape. And oil's been up. IVR is pretty low at 5.5, but we're going to leave that on and see if we can collect the rest of that $95 extrinsic value. If not, and it comes down and tests my short strike, then I will roll out to the next monthly option cycle. But you can see we're kind of trading in a range. So I think we're going to be in good shape on that. DraftKings has done really well. They came out with earnings last week and beat, and I've got a 35 call. The stock's trading at 31.74, $37 left. It already made a pretty big jump up, but then it came back down. So I think that call is in good position. I like my long-term leaps option that we've got on. So I've got a deep in the money call that we're up big, 1,027, and have done really well over the last, $1,331 in the last year, and $880 in the last 6 months. So I'm going to continue to be long and probably do the leaps with a call against it on big up moves. Then I'll put on the call and collect premium as well. And phase. All right, these guys, we've got an iron condor on. I actually got hurt on this last week during earnings. Let's see. Yeah, we had an iron condor on. Earnings came out and there was a big drop. I got hurt, and what I did was I recentered and sold another iron condor for $3.90, and now we're up a little bit on that. But between 135 and 175, we make money. Uh, and yeah, there was a big move down. But long term, it's solar inverters and solar and EV chargers for autos, and it's in an industry that's really growing fast. So I like Enphase long term, and we are currently in good position. Stocks down, not too close, but more towards our put vertical. But I like that because I think the next move is up. I don't think it's going to go down much further than this. Let's hope not. If it does, at some point, I'll roll down this call vertical because there's 41 days left. So we'll keep that one on. This is a small one. We're not going to talk about that. IWM, I sold on a big down day last week. I did sell a put vertical in IWM. Let's see. Over the last 180 days, we've made what, 356 bucks. So we've been doing pretty good. I'm long by selling a put vertical in IWM, and then I've been short the Qs since, that we talked about a pairs trade. I did a video on that, but you can check that one out. But I'm short the Qs and long the Russell IWM right now. But you can see on the curve mode, we make money as it goes up. Meta, we've been betting against that because it's at all-time highs, and it did drop. It did us a little favor last week. And anything below this 320 short strike, we make money. So on Meta, I was actually thinking it was kept going up. I was thinking I need to close this out, but I'm glad I left it on, and now we're up $182 in this trade, and we've got $241 in extrinsic premium to still collect on it. And I like having some short positions on, especially in this market. As I indicated, we're at still high PEs, and if the market drops, tech and some of these stocks are going to move down. So it's nice to be able to profit on the way down as well as on the way up. MPW, medical properties, this one's a long-term hold. I've got the shares outright because there's a 12% dividend that they can pay, but it's a real estate, it's a REIT, but also in medical or healthcare type properties. So I like this one long-term. And let's see, Netflix, that's always been a pretty good one for us. Netflix is trading, we're at 431. Let's see where it is on the chart. It's come down a little, but it's still kind of high. But we've got a 405, 480. So we're still in the middle between our put vertical and our call vertical. And we've done pretty well. Wow, $2,500 over the last 180 days. 27, almost 2,800 over the last year in Netflix. So that one's a fun one to trade. Palo Alto Networks is a new one that I put on, and the reason that I put this on is because look at the IVR. The rank is 85. I know the company pretty well. I used to sell products to them, but it's Palo Alto Networks, and they're the leader in the world leader in cybersecurity. But Fortinet, a competitor, came out with earnings last week, and they did not meet expectations, and they dropped. So Palo Alto dropped, but it was up here, in the 250 up to 257, but it dropped to 218 last week. So, and IVR is high, so I figured, hey, I'll get long if I may get hurt if the market drops, but I think long term Palo Alto, I'll just stay long and keep rolling the verticals, and try to make some profits that way. Uh, Palantir, we've talked about this one a lot, and we've done pretty well. It's kind of trading in the range. We've got a 18. Well, we've got one leaps and a call against it, so that's a poor man's covered call. And then we've got two strangles, the 18-19 strangles. So if you look at the profit zone, we're right in the middle of it, right there. And we've done pretty well, I believe. Yeah, $904 over the last 365 days. And yeah, in the last 60, wow, we've done 1257. So we've done pretty well in Palantir. And let's see, when they've got earnings coming on 8/7, so next week. That'll be interesting. But if it moves against us and moves down, I'll probably get long. If it moves up too far, I'll probably get short. So we'll make some adjustments next week. PayPal came out with earnings, and I had a $3 wide 74.71 put spread, and we got hurt. So you can see it. I closed that. I sold it for $1, so a third the width of the strikes. Closed it for almost $3, the full loss, $2.94. I could have just left it on. Well, there's only one day left, so yeah, I gained $6 in a day. That would have I would have lost the full, $300. So we were down, but then what I've done now is put on a new put vertical. So another way of rolling, but $5 wide, 60.65. We're at 62.75. So it's moved down quite a bit, but that's when you want to get long, as long as you know that they're good stock. It's a good stock going forward, and I do believe that PayPal is good going forward. They're in that fintech payment, and they're going to do well over the next year. So I'm long PayPal. The Qs came back and helped us out. They're trading at 372 now. They were at 383 last week. So there was a bit of a drop from last week. And we're profitable as it moves down. So again, we're long Russell, short Qs. And yeah, so I'm using that as kind of a hedge against this trading portfolio. SoFi, we've got 300 shares and 3 leaps options as well. It's at 9.5. I think long term, we've talked about SoFi. It's going to be a monster financial and bank stock moving forward. Let me see what is earnings. Yeah, they had earnings last week, and it actually came out and was pretty good. Let's see how we've done in the last 180 days. We've got $568. So we've done pretty well in SoFi, and again, I'm going to continue to be long. I'm sure that'll show. Yeah, as the stock moves up, we're going to profit more and more. So any big down moves in SoFi, I recommend, hey, buy a leaps or buy the stock or sell puts. The puts don't pay a lot though, and IBR is low at 5.4. So that's why I've got stock and the leaps options. But love SoFi long term. Spotify's a new one I put on. 140. It got hurt. They actually, I believe, had pretty good earnings. But I sold put spread, collected $133. You can see here, and we're down $82. We've got 13 days. I'm going to see if the market rebounds. I think this is more of a factor of the whole market dropping last week. But Spotify's got great fundamentals, and they came out with they added like 5 million subscribers in the last 3 months. It was double what was expected, and earnings did come out, and the stock jumped. The valuation is very good. The revenue's growing at 50% annually. There's some people have a target price, up in the 170, 175 range. So I think it's going to do well going forward, and that's why I'm going to keep the put vertical. I'm going to wait a little bit longer, a few days next week, and see if we can get above that 145, because then we'll be profitable. And then if not, I will roll to the next cycle just by going boom and then roll. and then 9:15, 41 days out, I'll click that, and that will automatically roll, get a $10 credit, and boom. But I think there might be a rebound. We'll see. I don't know. We'll see how the market goes next week and how those Thursday and Friday, the CPI numbers, how they come out. TDOC we've done really well in. It's at $26. I had a poor man covered call on. I sold or I closed out one, and now I've got one on. But we did pretty well in that over the last 180 days, 829 and 1199 over the last year. So TDOC I like long term, and that's why we've got what we've got on, and you can see as the stock price moves up, we profit. So we've got the poor man's covered call on right now in TDOC, and our call is all the way up to 30, and we've only got $11 left. I should probably close that out. And, I may do that and then put on another one on a big up day. So I'll probably close out that call Monday. Tesla 255. It's let's see what it's done. Yeah, it's dropped a little lately, but it seems to be in a fair range right now. And long term, Tesla's great, but they did slip a little on earnings, but they dominate that EV market. And anytime there's a down move, I look to go long Tesla. UPS has earnings coming up, I believe. Let's see, yeah, on 8/8, so next week. 175-200. I just put that trade on. We'll see how that does. It's kind of an earnings trade. It's leaning a little long now, so with those reports coming down, I'm not sure how that's going to do. But long term, IVR is good, and we were able to collect some good premium. Well, looks like we made a little bit of money, 77 this year. But let's see, just the trade that we just put on. Yeah, we collected $157 when we put that on last week. So we'll watch that through earnings. Upstart, its stock price is at 60. IVR is 50, so it's good. It's a new trade. It's an earnings trade. Earnings next week. Just taking a shot. IVR is big, and it's cloud AI for financials. It's a hot sector. We'll see how that goes when earnings come out. But there's a huge range. From 42 to 77, we make profit, and it's way up there. So I don't think it's going to go up much further. It's been up so high, and then how far can it drop? It's in a good sector. We'll see. I don't know. Stocks like these sometimes move a lot, so we'll see and then make the adjustments. Wells Fargo, I'm not going to talk about. We've got we're long the bank, so I've got some leaps on there. And then last one, I've got almost full profit, $19 left in ExxonMobil. Oil's been up, they've been doing well, but we've got a 95-100 put spread on, and I believe we've done pretty well in oil or in Exxon. Yeah, $239. So we haven't traded a lot, but just over the last 60 days. But any drop in oil, then I'll put these trades back on. The IVR is low, so I'll probably just close this out or let it expire worthless, in 13 days. If it does for some reason drop down, then I'll put it on another tranche and sell another vertical spread, because IVR will likely move up as the stock price moves down. All right, guys. Well, hey, I think that's about it. So appreciate the time watching the video. Again, please hit that like, subscribe if you haven't, and let me know in the comments below. Please comment and let me know what you're trading. If you've got these trades on, if you've profited in these trades, and any other trades as well. Any questions that you have, let me know, and I will be sure and answer those in the comments as well. And I think that's it. Be sure and download that free options workshop, like and subscribe, and see you in the next video. All right. Thanks, guys.